Hello and welcome to the first of our Minds and Money 5 at 5 shows sponsored by Sprott. For those of you attending 5 at 5 for the first time, our aim is to maintain engagement through investors and miners through a lively interactive format. A few admin announcements before we start. To make it as interactive as possible, please have your video switched on. To ask a question, you can either submit them via the chat function, which is at the bottom of the screen, where Jochen has just posted a hello and invited you to post your questions. You can also wave your hands virtually and we can unmute you and you can ask your question live. We have a star-studded lineup of guests, so to introduce them, I'd like to hand you over to Jochen Staiger, founder and chief editor of Commodity TV, a pioneer in online mining channels with over 1.2 million viewers and counting. A warm welcome to you, Jochen.
Hey Andrew, thank you very much, and also very warm welcome to all of you. Well, I don't know what time zone you are in, but here it is 11 o'clock in the night. But yeah, we are just warming up for a great session here at Minds and Money 5 at 5. First of all, let me introduce to you our guests here. We will start with Jim Greig, President and Director of Benchmark Metals. Then we have Brad Langille, the CEO of GoGold Resources, and Cal Everett, and the President and CEO of Liberty Gold. Then we're gonna move on with Matthew Manson, the President and CEO of Marathon Gold. David Palmer, President and CEO of Probe Metals, would present afterwards. And then we have as our special investments professional, we have two Peters. The first Peter is Peter Maletis, the President of ASA Gold and Precious Metals Fund from Merk Investments. And then we have famous Peter Grosskopf, the CEO of Sprott. Welcome also to you, everybody, and great that you have made it up here. Yeah, let's move to our first mining update, please, here of the show. And Benchmark Metals is a mineral exploration company focused on proving and developing the substantial resource potential of the Lawyers Gold and Silver Project, located in the prolific Golden Horseshoe of northern British Columbia in Canada. Benchmark is led by a dynamic group of resource sector professionals who have a strong record of success in evaluating and advancing mining projects from exploration through to production, attracting capital and overcoming adversity to deliver exceptional shareholder value. Jim Greig is the President Director. So please, over to you, Jim, and give us an insight into your company.
Very good. Thanks for having Benchmark on your show, Jochen. Benchmark just recently announced a $48 million financing, and this goes to quickly advancing our project to a production decision. So we currently have 5 drill rigs turning at the site. It is an exploration, gold and silver exploration asset in northern British Columbia that is road accessible. We don't need helicopter support. Our plan with this 5 drill rigs right now is to drill up to 100,000 meters for completion this year. And that'll be followed by 2 big milestone events. We hope to have a new mineral resource estimate out in about 5 months' time, early in 2021. And then on the heels of the mineral resource estimate, we've already begun work to complete a new preliminary economic analysis. So this scoping study should follow directly after the resource estimate. So given we're trading at about $160 million market cap and we're fully funded for 2 years, we expect these big events over the next 6 months to rapidly move the market cap of the stock.
Wow, fantastic.
So
that was
a quick 2-minute bio. Yeah.
That was fantastic. All in one, like it. Great. So you said you have $48 million, and I just looked some hours here before. Sprott Capital Partners was the lead manager of it. So Peter, how much have you guys invested into it and why?
I couldn't tally the total dollars, but I can tell you we've been involved from the inception. In fact, this is maybe news to the team, but I was involved along with Keith Peck in financing the original Lawyers Mine back at when it was Shenny Gold Mines in the very early 1990s. Sprott has not only invested in Benchmark, but has also helped them raise capital from outside institutions. So we're all in, as you would say. and very excited about the potential that this mineral lode is much bigger than had originally been understood.
Fantastic, thank you. Yeah, so that means you guys are really convinced, and it's a big confirmation for you, Jim, for the company, of course, to have such big and potential investors with you. A question: what are the drilling costs? I mean, 200,000 meters, that's quite a lot. You said you are financed for the next 2 years, but what costs the meter drilling up there?
Well, we're currently running diamond core and RC. So our diamond core drilling is all in just under $200 a meter.
That's
and
Canadian
the
or
RC
US?
drilling, that's Canadian, yeah. And the RC would be just under $150 a meter. But our exploration costs are quite conservative and low, simply because there's a former footprint from production here, so we can drive directly to the drill site.
Okay, fantastic. Then we have a question here from Fernando. Who are the main stakeholders?
So as Peter mentioned, Eric Sprott has been one of our biggest supporters. He is our largest shareholder. But as we complete this near-term financing, we have 3 major US institutions who are stepping up into Benchmark as well. So we've moved from retail to a large institutional ownership.
Great. You have released a detailed exploration target on core Cliffs Creek and Duke's Ridge deposits, but ABG was excluded from that. What is the risk compared to the other 2 and options, and why is this being drilled second?
So there's actually 3 zones that will report globally to the resource estimate, and one zone is quite large, with a lot of data associated with it. And the 2 other zones that includes AGB are going through thorough drilling this year. So we hope to have those 2 other zones into the new resource estimate. And AGB is actually could be a source of a starter pit because it's much higher grade than the other areas.
Then there are 2 questions which I can put together, I think. What has been holding back the share price lately? It seems somehow it doesn't want to pass $1.41. I think that's because of the financing. And then also, are you legally allowed to put out drill results in the middle of a large financing? I think not.
Yeah, well, the financing was announced before we had received any drill results. So, you know, it's quite clear there's management and insiders don't hold any specific knowledge or material information. But we plan to be releasing drill results imminently, very soon, and that would run straight through to December period. But I think your question is correct there, or answer is correct. It's the financing that's keeping a lid on the price for the moment.
Fantastic.
Yeah.
Can you describe the geology, please, but make it, let's say, a little bit in the short form?
Sure. Well, look, it's a low sulfidation epithermal system. Mineralization is right at surface under boot. It responds very well to a conventional gravity and flotation or gravity leachability for very good recovery, up to 95%. We don't see any issues with the flow sheet or recovery. This will be 3 large open pits at surface, and we're fast tracking this over a 2-year period.
Okay. Then another question from Fernando Chipote. Does this deposit have previous drilling?
Yes, well, it was a former producer 30 years ago. So there's a history of a small amount of mining, but also considerable data from drilling that we have within our database.
Great. Then also the last 2 years.
Jochen, could I ask a question?
Please, Peter.
Jim, Jim, you know, as a shareholder, it's been a long time shareholder. Just curious, the size of the raise is pretty significant. I'm just curious if that has changed how you're approaching looking at the project and drilling, and kind of what changes you're making and how you're looking at things.
Yeah, the size of the raise has had a large impact. We will now plan towards a feasibility study and can plan on this immediately. So A feasibility study is going to include more metallurgy. We've already started on the permitting path with baseline work. We've just completed agreements with the First Nations. So this new injection of capital has allowed us to leapfrog to detailed design within a 2-year period. It will also reduce the typical on and off news flow that most Northern Canadian juniors face. We'll be installing infrastructure here with the capital that allows us to work year-round and drill year-round with results.
I have also a question on your production scenario. The question for me is a little bit, you are 11 kilometers from the Baker Mill and 45 kilometers from the Kemess Gold copper mine. Do you have a scenario like to say, okay, before we go into complete self-sustainable production, we are using maybe those 2 outlets also in addition to process the first ore to generate cash flow? What are your thoughts on that? Or do you want to build everything from scratch by yourself?
I believe that the scope and scale of this gold silver project is such that it will be a standalone producer. That small permitted mine that lies a few kilometers away is not necessarily fit for purpose. It's a slightly different mineralization, but it's also a much smaller capacity. We're targeting multi-million ounces here, so this indeed has potential for a world-class operation.
Okay. Also, I saw in your presentation with the infrastructure, you are writing that you have already an existing infrastructure of $50 million. Can you describe that a little bit more in detail? And how does this help you finally in the development of the mine then?
Sure. So the existing infrastructure from former production, there's a full road network running across our property, so access is very good. There's large cleared and lay down areas where a new facility, be it mill or plant, could be placed in addition to offices. There's a small existing tailings facility that sits at site, to be determined whether this is fit for purpose. But there is quite a history and a legacy of in this area, and you can see the footprint on the ground.
Okay. Last question here from Barry. What the holes you are drilling then? Are you going vertical, and how deep are you drilling, and in what angles?
They're all angled holes. And we're doing these large fences across each zone. There's no vertical holes. We're basically cross-cutting mineralized zones anywhere from, I'll say, 30 to 60 degree angle. The bulk of all the drilling is going towards the resource estimate. And, you know, we're aiming for about upwards of 100,000 meters of drilling to be completed this year.
Okay, super. Fantastic. Thank you very much, Jim. That was very fast and very well answered. I like that. So let's move on to our second company. GoGold is a Canadian-based silver and gold producer with projects in Mexico. They recently came out with a great set of Q2 results. Brad Langille, the CEO of the company, wants to tell us more. So Brad, please give us the insight.
Well, thank you. Yes, GoGold is a Mexico-focused junior. All of my career, 27 years, has been in Mexico. I've headed 4 public companies down there. We've had the opportunity in those companies to build 3 mines over the last 20-some years and refurbish a 4th mine. We have a very strong technical team building those mines and doing exploration. We've had the opportunity to buy and sell properties. Most recently, we sold a property to Agnico Eagle, the Santa Gratuitas property in GoGold. But really what's driving the company right now is our Los Ricos project in Jalisco, Mexico. And I also should mention that we are a producer as well. We've been producing at our Parral facility now for 6 years. Last year, we produced 1.8 million silver equivalent ounces, and we're projecting we'll produce around 2.2 million silver equivalent ounces this year at an all-in cost under $15 US per ounce. So really, we have a model in Mexico that's worked very well for us. We've done a lot of deals with private families, kind of off the radar assets. We brought the capital to them, and we've developed those mines. I'd say Los Ricos, for me, in the last 20 years, this is by far the most exciting project for GoGold. It really is district scale. Our claims cover an area of about 35 kilometers in strike length. And really, we're looking at bulk tonnage. We just released a resource in our Los Ricos South project. That resource was measured and indicated about 63 million silver equivalent ounces at a grade of just about 200 grams. And on top of that, about another 20 million ounces of inferred silver equivalent ounces at about 190 grams. And that would be constrained to a pit. So we look at that as being what should be a very economic deposit, we feel. We're going to advance that now to a preliminary economic assessment in Los Ricos South. And also exciting is that in Los Ricos North, we've actually started our drill program there. We currently have 3 drill rigs going, and we're focused on an area of about 6 kilometers trend, where we're doing detailed mapping and drilling with 3 machines. We'll have another machine starting in about 10 days. We look at over the next 60 to 90 days, we hope to increase that to 8 to 10 drill rigs. There we're truly drilling for resource. I mean, what we've done essentially in a lot of the areas, we've done the drill under the head frame. It's ended up being a good place to find more metal. Essentially, in the past, these were underground mines where they mined 2, 4, 6 meters of very high grade, but that was surrounded by a halo up to 50 meters wide. And that's what we've drilled off, that halo, and other ore shoots that they did not find. We're very excited about Los Ricos North. We've started drilling in an area called Trini. There were 50 legacy drill holes there, up to 24 meters of 27 grams gold equivalent, very near surface. We have our first 8 holes in there that we've released. And they've essentially confirmed those old reverse circulation holes, which we were, at those kind of grades, we were a little bit skeptic to see if core drilling, we could reproduce that, and we have. So production continues. We have another 8.5 years of reserves at our Perel facility. That's a tailing project where we've developed technology around agglomerated heap leaching of tailings. We process about 5,000 tons a day, 2.2 million ounces a year, all in cost under $15 an ounce. So you can be sure that at these commodity prices, we're making some really good cash flow from Perel right now to fund exploration, and that along with a very strong balance sheet with currently over 27 million US in the bank and no debt, I think will lead to a very aggressive and successful project at Los Ricos. I'd also mention that I am the second largest shareholder of the company at a little over 8%. Management holds about 20% of the company, and institutional, we have some very, very good institutions involved in GoGold, and we will be 35% plus institutional holding.
Mm-hmm. Okay, great. Brad, thank you very much. And of course, I see on the top of the institutional list again, Sprott Asset Management.
Mm-hmm.
Peter, short question to you. Please give us your thoughts on GoGold.
Well, this has started to look like a loaded question, so I apologize for that. Yeah, we have GoGold as a kind of focused holding across a firm, ranging from our funds to our broker dealer who has brought that idea to other institutions. See it as a proven team that's now working with a resource that looks like it could grow a lot, and so it's the exact kind of equity that we like to focus on, something that's not been discovered, and that either other institutions or investors or even other mining companies can kind of discover with us over time and take it to higher valuations.
Great, thank you. Right, your recent maiden resource at Los Ricos South impressed the market. Is the resource growth at that asset now over, or do you think you can find a lot more?
Well, actually, we had to have a cutoff date for data cutoff for the resource. We're still drilling at Los Ricos South, and in fact, after the data cutoff, we intercepted some great holes at an area called Rascodero. At Rascodero, for example, one of the holes that did not make data cutoff was 18 meters at almost 900 grams silver equivalent. That was quite close to surface as well, and we would see that potentially falling into an open pit as well. So there's more growth at Los Ricos South. And really, historically here, though, Los Ricos North, and most of the activity in the district was in the first part of the last century, it was much more active in Los Ricos North. We were missing 5 critical claims that we were able to secure last March. With those claims, we initiated the program in Los Ricos North. And really, from an exploration potential standpoint, we see as much or even a lot more exploration potential in Los Ricos North on 3 targets that were essentially grid drilling for resource. That would be the Solomon, Malola, and Trini. And then we have another whole separate project, which is more pure exploration. And it's headed up by another team leader. And he's outside of that detailed area, resource drilling. They're looking for exploration targets and visiting all these old mines. We're up to actually 95 targets that they visited now. Just a very first pass, a little bit about geology, a few samples. And we'll rank those and do some real exploration drilling as we go forward here on the top ranked targets there as well.
Great, thanks. Peter Maletis, you had a question? Is that correct?
Yes, yes, I did. And I might as well just get this out of the way. The ASA Gold and Precious Metals Fund, which I manage, is a shareholder of all these companies, thanks in part to Sprott Capital. So that's my disclaimer for all these names. So I'm somewhat biased as well. But that being said, Brad, on the Parral Tailings project, how does that? How do you look at that relative to sort of the exploration at the Los Ricos side? And is there a reason that granted there is cash flow generation, but is there a reason to have both that and the exploration, or could you possibly look at offloading Parral at the right price?
Yeah, never say never. You mentioned the right price. So what is the right price? The cash flow that it's generating right now, that right price would be a lot higher. It has 8.5 years left. There are some other advantages about with owning with owning Parral. We have a technical team there, an operations team. And as we go through the process with Los Ricos, and we're going through a PEA now in Los Ricos South, it's really nice having an operations team there that can help with that PEA, can help with looking at the engineering. So we have those people on staff over at Parral, and that's useful because really we are mine builders and we like to keep that mine building team together as well. There is one other thing about Parral Tailings Retreatment Project. Besides generating really good cash flow and having still a relatively long mine life, as far as ESG, it's a great project. The partner is the municipality of Parral. We pay them about $60,000 a month, US. That's significant to the municipality. We are cleaning up 300-year-old tailings, which sit right in the middle of a city of 130,000 people. They want that land back. Of course, we're not on the hook for the old liability. They've maintained all of that. Our new facility, of course, is built to Canadian and US standard. But, it is really an environmentally green project. It is a good community, social responsible project. I would say we've been visited by the subdirector of mines from Mexico. They love the project, even up to the president himself has visited Parral, and he knows of the project. So it's good in that respect as well.
Great. Also, a question from my side. You said 2.2 million ounces silver equivalent for this year. Is that correct?
That's correct. Yeah.
Yeah, super. Because it looks to me like that you have like a 25 to 30% annual growth here since 2017. And to what extent do you think you can grow the production in the next years? Is like 3, 4, 5 million ounces possible?
Really, with the tailings we have now and the infrastructure there, and really our focus more being Los Ricos district, I think we're at a good level here to be between 2 and 2.4 million ounces. It's very a steady state, but we're always looking for opportunity. You know, in Mexico, you can truck ore a long way, and in this case, you know, we've looked at other opportunities, some high grade tailings that potentially we could truck to the facility and pay for them by the ton. But no, really the focus is going to be on the exploration development, and Parral is very steady state. So it's operating well at those levels.
Okay, so to what extent do you think you can bring down your all-in costs? I mean, $15 is quite good as a real all-in cost, as I understood you. And now, as said, you are rising your production quite smoothly here. Do you think you can bring down the cost, let's say, to $14 or $13 to make it even a higher margin?
Yeah, we think that the mid-13s is achievable, and one of the reasons that it is because we've recently installed a SART plant. Now that's a plant that will capture copper for us, copper sulfide, which we can sell, and we do, and it pays for the operation of that plant. But the big thing is that a SART plant regenerates cyanide, and cyanide here is our biggest consumable. We were using about 14 tons a day at about 2,200 US a ton. We started up the SART plant first quarter. It was a $3 million capex. And it's generating 5 to 6 tons of cyanide, regenerated 5 to 6 tons of cyanide a day. So that's a significant impact, which is reducing our costs. So we think in the mid-13s, we can get down to those costs, all in sustaining.
Fantastic. Yeah, that's easily $3 million a year, 3.5 million. That's a lot of money. Great. Super, Brett. Well done. Thank you very much. And let's move on to our next company. And the next company is here, Liberty Gold. And our next mining update is fully focused on gold discoveries in the world-renowned Great Basin of the United States of America. Here is Cal Everett, the president and CEO of Liberty Gold. Cal, the floor is yours, please.
Thanks so much. Liberty Gold is focused on sedimentary hosted Carlin-style gold oxide systems in the Great Basin of the United States in Idaho, Utah, and Nevada. Just to get capital structure in front of anyone who's watching this, there's approximately 237 million shares outstanding. Our core project is the Black Pine discovery in Idaho, that which we believe is a tier 1 oxide gold discovery. And our second project is the Gold Strike deposit in Northwest Utah, which has already got a PEA done on it, $1,300 gold, and it's around 1.2 million ounces. Most of the market cap of Liberty Gold has to do with the Black Pine discovery in Idaho. And it's a very, very large gold system. And so if you look at our corporate treasury and how we've been putting this company together, we have a very, very successful team of 5 geologists who have worked together since the Long Canyon oxide gold discovery in 2011 that was sold to Newmont out of Nevada, and they're specialists in these types of deposits for 2.3 billion Canadian. And that is the lowest cost producer in the Nevada joint venture mining group of mining projects. Produces at around $5.75 an ounce, all in sustaining costs. So when our geologists go and look for a project, it's really key that we're following ESG governance. So the projects are all past producing oxide gold deposits in the 90s when you had $300 to $350 gold. All of them have been fully reclaimed. We assume no environmental liability. There is no fish or endangered biological species. We check on this before we take in a project. Within 20, 30 kilometers of each project. Both projects are already scarred from historical mining, but have gone through forest fires, so there's no timber values. They're an hour's drive away from any community, and they all have power and access to water. So that's really important with regards to the environmental side of what we do. And both of those projects fit that mold. 4 years ago, when I joined the company had a portfolio of projects in Turkey and in the Great Basin. And it was too many projects in one company, and I thought it was a bit confusing as part of the management to how we're going to handle all of these projects. So about a year ago, we started monetizing projects. And in the last year, on projects we couldn't mark to market that people would give us no value for, we've removed 1 NPI royalty and 4 projects. We just recently sold the Langille porphyry copper gold deposit, our 40% interest in that. That went for $22 million US, of which we get another payment coming in on August 15th, 2021 and 22 for $6 million US. It's all designed that way, so it's non-dilutional to the shareholders. So the last financing this company has done was at 55 cents. The company is currently trading at $2.10. And by the time, with all these asset monetizations and keeping the core projects, we're simplifying the company to 100% ownership of Black Pine, 100% ownership and control of Goldstrike in Utah, cash and receivables, and those receivables add up to approximately $75 million. As part of these asset divestitures, we also end up with 9.9% of 2 public companies, 19.5% of a third public company, royalties on all 3 of those companies, and substantial cash payments as well. And that goes back to the foundation of non-dilution of shareholders. So currently we have 18.8 million in the treasury, and we have a lot of in-the-money warrants that up to another 20 million Canadian that come in over the next 14 months. So when the financings were put together, it was Sprott actually who was the lead on this. And it was their connections into the United States that brought Liberty into that. So currently, I would say 35% of Liberty Gold are owned by US resource funds because the gold is in the United States. There's 35 funds that own us. It's approximately 45% of the company that's reported, and that excludes unreporting funds out of Europe or Canada or London. So it's really well put together, and the company is well funded and ready to go. The only little twitch here is we have 1 more project in Turkey called TV Tower. The 3rd largest silver deposit in Turkey is there. We own 60% of that. And we have 1.3 million ounces of gold equivalent and 3 porphyry copper gold discoveries on that and 2 big oxide gold systems. And now we're trying to figure out how to monetize that asset to the shareholders, either by selling that asset or improving it and selling it, or improving it and giving it to the shareholders. So we're sitting on a very, very large, what we think is a tier 1 porphyry copper gold target, and we're drilling that first hole into that target today, even though we're focused in another direction. It's certainly not going to diminish the value of that asset, but it's certainly going to expand it. So with all of that in front of you, then you go back to what is Black Pine. And Black Pine was a historical producer in 1997. And our geologists went in, we bought the project for approximately 1 million US, spent 2 years of remapping it, digitizing the historical database they found, and getting a permit to drill it. And the interpretation was from some brilliant scientists that the previous operator only drilled to 92 meters, and the big discovery was just below them, 50 meters below. They drilled the first hole, and they hit 48 meters of 1.78 grams of oxide gold, which is 3.5 times the grade which is mined in the Great Basin. And those high-grade discoveries is why, on such a small portion we've drilled, market cap's around $475 million so far. It's just a really big oxide system. And the historical drilling and our drilling shows that the oxide system that is historically drill confirmed above a 0.2 gram cutoff covers a 14 square kilometer area. So there's currently 4 drills sitting on that project, 1 core drill doing the 3rd round of metallurgy. And the initial metallurgy is showing it's coming out 10% higher than what's being produced in the Great Basin so far. And so we just keep drilling and we keep hitting. And we have 10 priority targets. We've drilled 4 of them, and we've hit 4 discoveries on 4 targets. We're now drilling the 5th and the 6th. So I'm not going to get into the geology about oxide gold systems because they're cheap.
Yeah, because we are running out of time.
Yeah, we're cheap to build. But ask a couple of questions.
Good, super. Cal, thank you very much. Peter Maletis, I think you had a question.
Yes, Cal, obviously you mentioned the size of this system is quite large and still kind of unknown how big. How do you balance the need to increase the length of the drilling outside of the current area versus the need to prove up the resource?
Well, we have to prove a resource up hopefully for Q1 next year. And the mandate I've given the geologists, it has to be over 2 million of good oxide ounces with a half, and at least 1 million ounces of over 1 gram, which is payback of capital rock. And so there's 2 drills focused on building the resource, and 2 of them are testing the district over an initial 7 square kilometer area. And then it'll go out to 12, and then it'll go to 14 after that next year. So you kind of have to balance each one because one's blue sky and one is real, is immediate. Okay, so I don't know if that answers your question.
Yep, no, that's helpful. Yep.
Super. I have a question to Turkey, to your Turkish projects. Let's say, given the fact that you could divest them, how would it work to get the money outside Turkey, first thing? And the other question would be for me, because, you know, I'm living here in Europe and we are quite close to Turkey here. And the situation is really not easy with the political situation, but also with the legal situation. How would that work that you sell that, let's say, to a Turkish partner, and do you get the cash out immediately? And how
we get the cash out immediately. As soon as the definitive agreement was signed, the cash was in our account in 3 hours. And so if your company that owns the asset is registered in Turkey, you're taxed at a Turkish tax law. If our office is in London and are based out of the Cayman Islands, and they have a tax treaty with Turkey that no taxes are payable. So we get our money out tax-free. Our partner would have to pay taxes.
Okay, super, great. Yeah, let me see. Yeah, the question here is from Fernando. Are the management and directors stakeholders? I think we had that here with 6.8%. Is that right? Still?
That's
or
correct,
is it more?
Yeah. It's that. That's right.
Yeah, fantastic. You are covered already by 6 analysts, and of course, Sprott is one of them. Stiefel, PI Financial, Haywood, etc. So, what are their price targets in average?
They average approximately $3.20 a share at this point.
Oh, okay, nice. Then there is a question from Jacob. Cal, what are your immediate plans for spending the cash in the treasury?
There's 4 drills working away and a 5th one in Turkey, so that's the immediate plan. And then we're doing a 3rd phase of metallurgy now, and then because there's such an assay backlog, we could drill 10 holes to the assay lab and we'll get 3 holes back before we give them another 10. There's just so many samples being taken in the Great Basin. And then we go to a resource estimate in Q1.
Okay, yeah, I mean, that's really a nice work program. I saw also that you did for Goldstrike a PEA, and the initial capital requirement is 113 million. What are your plans for Goldstrike then to, let's say, go to a pre-feasibility study? So what's going on there?
We're budgeting it now, and the number we're coming in with to do pre-fees is between 6 and 7 million over a 1.5-2 year term. And that includes infill drilling, because that was done at $1,300 gold. At $1,500 gold, I think the after-tax IRR is 41, and at 1,700 it's 52. And the payback obviously gets faster because of the higher gold price. We just want to take it over 7.5 years up to 10 or 12 years. And a pre-fees will include the infill drilling to build on ounces as well.
Great, super. Any more questions from our experts here? Peter?
Well, Cal, congrats on an amazing discovery at Black Pine. You and Moira Smith have added a lot of value to properties. How big is this one going to get? Could you give us some arm waving? Because the hits are coming from so far apart now. Why would you put?
I can tell you in a meeting, Peter, to a large producer the other day, that Moira said that Black Pine's bigger than Long Canyon.
Okay.
It's different. It's structurally different because there's such a massive volume of rock that runs above cutoff around the high grade, but she said it looks like it's bigger.
And I guess the challenge is, when do you put out a PEA, because it just keeps growing?
Well, it's moot, because if you put out a PEA on 2.5 million ounces and it's going to 5, the PEA is worthless.
Yeah.
Right. And then, so you might as well just keep putting on metallurgy, and anybody who's looking at the company can figure it out. But we have to explore these things like we're going to mine them. You don't always have a REMAX sign on your front lawn, right? It doesn't
Okay, thank you.
Super. But going from 2.5 to 5 million ounces is a luxury problem to me.
Yeah. High class problem.
We take it.
Super. Carl, thank you very much. We are a little bit over the time here. Fantastic. Thank you very much. Keep it going, I would say. And let's move on to our next presenter, who was previously the president and CEO of Stornoway Diamond Corporation. Matt Manson was appointed president and CEO of Marathon Gold in August 2019. Matt, over to you for an update, please, on the company.
Thanks, Jochen, and I'm going to use a few slides here. And if you just go through the first couple there. Yeah, on to the next one. So Marathon is the Valentine Gold Project in central Newfoundland. It's our sole asset with 100% ownership. Newfoundland's a great place to do business. It's a resource-based economy. It's the cod fishery, it's oil and gas, it's logging, and it's mining as well. This is the biggest undeveloped gold resource in Atlantic Canada, 4.1 million ounces in all categories, and still growing. It's high grade, about 1.8 grams per ton, open pittable in the mineral resource. Those are PFS from April, which describes the project that we're going to develop. The strategy of this company is to build the mine. So 36% rate of return with a healthy NAV at $1,350 gold, and with low capital intensity, $272 million capex, at a 1.9 million ounce reserve and 175,000 ounces a year for the first 9 years. So those are the basic numbers. It's a healthy size project here. We are halfway through an environmental assessment. We're about to file our environmental impact statement. That's the schedule driver. If everything stays on track, and it is on track right now, then we'll be breaking ground in the beginning of 2022 with first gold pour middle of 23. And the feasibility study is ongoing right now with Senko as the lead consultant on that. The other sort of leg of our stool is the exploration that's ongoing, and that's what's generating most of the current kind of focus on us. It's going very well. We're spending about $9 million here to explore what's a 20-kilometer long piece of real estate, and we've just increased that by another 8,000 meters to go with an info program at a new zone called Berry that I'll show you in the next slide. And we've got about $54 million in treasury right now. And if you actually advance all the various pieces of animation here, so this slide is designed to communicate to you two things. The first thing is the simplicity of this project. So there's two large open pittable deposits, Marathon and Leprechaun. Marathon's about 2 million ounces, 2.5 all categories. Leprechaun's about 1.3 all categories. So that's the result of 9 years worth of exploration at this stage. And there's, these things have been Swiss cheese. There's 270,000 meters of drilling in those two ore bodies. This is a simple proposition, right? It's in the middle of Newfoundland. It's road accessible right now. There's a power station 30 kilometers away. It's on land. It's not at the top of a mountain. It's not in a desert. It's not in the high Arctic. We're not draining rivers or draining lakes or diverting rivers or moving communities. It's a straightforward proposition on Crown land that's currently being logged, and it's an open pit mine with a conventional mill, centralized facilities, waste rock piles, tailings facility, and that's about it. This is also designed, the second thing this is designed to communicate to you is how open the whole system is. So it's shear zone hosted gold. We're in a 20-kilometer long trend. Most of the drilling in the last 9 years has been on those two open pittable resources, but it's open at depth. The one on the right, Marathon's been drilled to 1 kilometer, and we're into with the same mineralizing system of quartz, tourmaline, pyrite veins. Is open to depth. It's open to depth on both deposits. What you're seeing here is just the depth of the drilling that's happened. And then the little kind of scratchy yellow lines you're seeing in between is the exploration drilling that's currently going on, and specifically that zone in the middle called Berry. And some of the drill results we've been getting over the last few months, we really sort of went at Berry properly at the end of 19, and we've been drilling it through the winter of 20 and then into the summer through the COVID thing. So, the 3 grams of 120 meters was last month. We've been knocking off some really spectacular results in this thing. And so we're taking to permitting, mine financing and development a 12-year mine plan for 175,000 ounces a year based upon those 2 open pits. But there's a potentially future 3rd pit here at least. We think at Berry, it's pre-resource, and so touch wood and health warnings all over that kind of statement. But it's looking really good, and there's a big push going on in that right now with exploration, and this thing is open at depth. So it's a terrific project to be taken to development. And if you go to the 3rd slide, some of the facts and figures on us. I mean, we have about a 500 million market cap right now, 230 share price. We've had a great run in this strong gold market, like a lot of people. We've raised about $60 million of 2 successful equity financings that Sprott, thank you very much, have assisted with as our investment broker. That's given us a very healthy treasury, which is sufficient to take us all the way through the next year and a half of heavy lifting of feasibility, permitting, detailed engineering, early works procurement. It's designed to take us all the way through the groundbreaking, which will be supported by a project financing transaction. And I want to show you some of the sensitivities and project value, because you put out pre-feasibilities or PEAs and you show your base case economics, ours are based on 1350 gold, and then you show kind of an upside and downside case. And now we're getting asked by shareholders, what does this thing do on spot? And if spot is 1950, it's got a 74% after-tax rate of return and over $1 billion of NAV. So we're all able to show those spectacular numbers right now, but this project certainly can do that as well. But as project developers, we've also got an eye to the downside here. This is a cyclical business, and it's our business to bring out the upside, but kind of guide to the downside. But some of the downside protections here in this project, 15% rate of return at $10.75 per ounce gold. One of our shareholders uses this metric where the valuation of the 15% discount, what is the valuation of the project compared to your capex? What gold price do you need to get a 1-to-1 ratio? That for us is $14.50. So this is a terrifically robust project in a great part of the world with lots of upside. And that's my 3-minute pitch.
Super, thank you very much. Quite impressive, I would say. So let me first look if there are already questions. Yeah, the enough was okay. Good. Yeah, where are we here? Okie dokie. How does Newfoundland permitting compare to more well-tested Quebec, Ontario, or to BC? What is a realistic time frame to have all your permits to build, and what are the big tickets? Risk of slipping, as we note, you have now moved the TMF once already.
Yeah, well, there's nothing particularly unusual about Newfoundland. As a permitting jurisdiction, it's a well-developed mining jurisdiction. The Labrador part of the province is a lot of big-scale iron ore, and of course the Voisey's Bay project. The island has a lot of gold mining, so nothing particularly unusual there. It's a provincial system married with a federal system. You mentioned the moving of the tailings facility. The one red flag we could have had and don't during the PFS is in the location of that tailings facility. It's important for us as mine developers in Canada to always have our waste products situated in a location where we're not impacting a fish habitat. If you do impact fish habitat, you trigger a delayed process essentially at the federal level. And so that tailings facility has the capacity we need, and it's situated in a location where we're not impacting any fish habitat. That's why it's situated where it is. And that means that we've got touch wood, we've got a pretty reasonable line of sight through to social acceptability and a successful permitting process. The big milestone in that is really release from the environmental assessment process. We schedule a 2-year environmental assessment process. We're about halfway through that. The end of that should be the summer of 2021, where we get release from that process. That's often called ministerial approval. And then we're into the kind of the routine permit by permit application process, site-specific permits. But the big milestone for us is release from EA. And if that happens next summer, which we hope and expect it will, then we're sort of breaking ground, beginning of 2022.
2022. So that means it would be like 2024, latest in production, 2023?
Mid-2023 for the first gold pour.
Super. Maybe it's because for me, it's quite late. I'm approaching midnight, but I did not find your AISC per ounce of gold.
Oh, it's about 800. It's not on my slide deck, but it's about $840 or so.
So 840, okay. So with that gold price today, let's assume you are making $1,100 per ounce approximately. If gold stays at that, and we all know that gold will move quite higher, with 175,000 ounces a year. So that would be an outstanding profit. That means you can pay back your capex in 18 months easily.
Yep, there's about 1.5 years payback. Yeah, that's right.
Mm-hmm. Super, perfect. And what are your thoughts on the capex of 272 million Canadian dollars, by the way? So that means I calculated in US dollars. There's already a 35% gap easily, meaning on the positive side. But how do you think you can finance that? How much, let's say, you can take on the credit side, and what equity do you want to take?
Well, I think this market gives developers like Marathon the opportunity to do something which is very vanilla in the project financing. I mean, the kind of private equity model of layer cake type financings of streams and different types of debt and different types of equity are I think what's open to us now is more conventional term loans married with sensible balances of market derived equity with long only gold and precious metals funds doing the equity. So that's the plan A for us, keeping it as simple as possible as befits the project. 50-50 tight debt equity mix with a proper equity funded cash overrun facility, and the project fully financed and properly financed to have a successful execution and ramp up. So keeping it as simple as possible and coming out with a liquid share register, liquid capital structure, a bunch of 3, 4, 5% type shareholders rather than having chunkiness in the share register. That's the objective.
Super. So what gold price do you want to use for the feasibility study then?
I'm sure we'll go with kind of long-term consensus. Right now that seems to be 1,500, 1,550 or so. We'll see where we are. The feasibility is scheduled for a release in the middle of the first quarter of next year. But I think we'll be going with everybody else, and people seem to be looking at about 1,500, 1,550 for the long-term price right now.
Okay, there's a question from Robert. Do you have any silver byproduct? And another question from Ryan is, how many meters are dedicated to Barry this year? And when can we expect to see a resource update that would include Barry and the gap zone between the two pits?
Well, we're doing in total, we're doing 44,000 meters of drilling this year overall in the whole project. 32,000 of that is in between Barry and the Marathon pit, which is about 1.5 kilometers long. And it's really discovery-oriented exploration. It's high risk kind of greenfield exploration, drilling along this trend that's never been drilled before. So Barry immediately is lit up very nicely. And we just increased that drill budget by 8,000 meters just a couple of weeks ago, which is infill drilling designed to get a resource. So we've really been focused. This is our year to really shake the bushes here and go after discovery and not worry about infill and resources. But because Barry is lit up with some terrific results, I mean, some of the best drill results this project's ever had, that now merits an extra rig, an extra drill program, infill drilling, and we'll get the guts of that down to about a 25-meter infill. The main resources here are still, we're drilled at 12.5 meters. So we're still not as infilled as we need to be, but 25 meters is pretty good. And that should give us the beginnings of a resource there. And we would hope to have that out in the first quarter. We'll have in about a week's time, we'll have 4 rigs going at the project, doing different things, continuing these step out holes, really going after new discovery. But now, Barry is, when you're a project developer and you're focused on the dry news of permitting and studies and timelines, to be able to talk about such an exciting exploration discovery right in the middle of your project, right beside where the mill is going to go. I think Cal said, I think somebody said, actually, maybe it was Brad, the best place to drill was under the headframe. Well, we're almost at that situation here with this deposit. So, look for something, I think, in terms of numbers there. First quarter of next year, and it's early. And again, it's early days, right? This is going to take a lot of drilling. These deposits take a lot of drilling to properly firm up. But it's looking good.
Super. And the silver byproduct, yes or no?
No. Very, very minor. Very, very minor silver association. Not currently in our thinking in terms of recovery on the mill because it's so minor. A gold-only product.
Yeah. Okay. Super. Just not killing the time. for our two Peters, you have any questions?
Yeah, I just have one quick question. Well, it may not be that quick. I'm just curious, Matt. You have hired some new people. You've been there for a year. I'm just curious what changes we could see. And then there's a new gold price. The price has increased pretty significantly, and I'm just curious how that has affected how you're looking at things.
With the hires, yeah, I mean, Tim Williams came from Rio 2, previously Rio Alto, so he's got a unique blend of skills. He's had project development, he had success with La Arena and Shuindo, but he's also a truck and shovel drill and blast guy, and we're looking with him to the mining of the ore body, right, the grade control and ore control. And then Paolo Toscano just joined us this week, started this week. He's our projects guy, cold weather engineering guy. He was from Alamos originally, director of projects there. So he's a metallurgist, process engineer. So that's us beginning to build the strength and bench that project developers need. There's not really, I wouldn't say, there's certainly going to be room for people to for these guys to come in and sort of put their hand up on mine scheduling or pit design or even a little bit of flow sheet. But, I think the pre-feasibility that you saw come out in April is a project we intend to build. Right, it's a stripped down version of what we had in the PEA from 2018. It's less complicated, it's lower capex, it's simpler, and that's very much that's the plan, right? The feasibility will look like that. And in terms of gold price, we're going to try and be disciplined, right? We're not going to go with the enormously large pits. We're not going to chase every ounce. I think we're going to again focus on rate of return and low initial capital and let the gold price, flow through to cash flow.
Fantastic. Okay, Matt, thank you very much. And now we come to our final update of this show. And this is from one of the largest undeveloped gold projects in Canada. David Palmer, the president and CEO, is from Probe Metals, is here to tell us what's going on. David, the floor is yours.
Okay, great. I guess I'll give it a very short elevator pitch. And probably let's just look at this map. And so, yeah, we're Probe Metals, junior exploration, gold exploration company. And we have a project in Val d'Or, so world-class historic mining district in Quebec, in Canada. So in the city of Val d'Or. So what was really interesting to me about this, and this map shows it. So if you look on the right side of the screen, the blue is all the property we've consolidated. Probably now I think this project is just over 400 square kilometers of ground. So definitely district scale. And the reason we could consolidate this much land is if we look at Val d'Or is historically, production has all been to the west of the Sigma-Lamaque mine. And if you look on this map, you'll see the town of Val d'Or, and then there's a brown square with Sigma-Lamaque written in a text box. And that was to me is the dividing line. So Sigma produced 8-9 million ounces in its lifetime, very big, world-class deposit. What was interesting is once you go east of Sigma-Lamaque, everything flattens out. And so the story of Val d'Or East is really one of neglect. Because it flattens out, there's not a lot of bedrock exposure. There's, you start to get marshier, you get a lot of till cover, so you don't see the rocks. It was more difficult exploration, and so everybody tended to go to the west where it was easier, where you actually tripped over deposits. What was interesting for me when I came here, and this was only 4 years ago, is when I look at it, it's a mirror image. The geology is a mirror image of the west. And I thought, why can't this side host 30, 40 million ounces? Same structures, same geology. It was just more difficult. You're looking for buried deposits. Geologists, if you give them a choice, will always go to where you get the most rock exposure. So that was to the west. So long story short, we spent 4 years on this. We've now grown to about 3.4 million ounces. And the amazing thing is we've looked at probably less than 10% of our property. So it's one of those great exploration stories, and a little bit like Matt was saying, like Brad was saying, we're in the shadow of head frames and big head frames. And it was just a case of using the right tools, using the right exploration, and finding. Now we're up to 3.4 million ounces, and I think a lot of grassroots, upside left on the east side of Val d'Or. And I really think we've confirmed that the east side has as much potential as the west side has already shown. So it's a great project, lots of upside. But, and I guess, you know, for the Australian model, we're already, you know, 3.4 million ounces, critical mass. Now we're going to start looking at this thing, you know, what does this thing look like in development? And so that'll be the next phase as we continue to grow those ounces. So that's, yeah, so that's probe metals. That's okay. We won't need to go over everything else. I think our time is short. That's just
You're fine. Please take your time. Everybody has the same time. No problem at all.
Oh, okay. Well, these maps, they're very, very short. So what we're dealing with, Val-d'Or is really predicated on this regional east-west gold system. All of the gold deposits, or most of the gold deposits in Val-d'Or, are basically fed by the same system. And what we've shown is we've got that east-west shear zones that are running through all of Val-d'Or. They're running through all of Val-d'Or East in our project. And it's really those that are feeding all of this gold. And when we look, we've got these north-south structures, and you can see Corvin gold trend, the Pascalise gold trend. Pascalise itself is up to 1.8 million ounces along that trend, still open in all directions. Corvin was the newest parallel discovery that we had 2 years ago now, I guess. And that one's already, you know, just approaching 1 million ounces. Interestingly enough, north of that trend, there's an old historic mine, the Beaufort mine, which produced over 1 million ounces. So very, very prolific producers in these systems. And I think it was really just that they were all covered and nobody was looking for them. And so this is a great exploration. Next slide, we will kind of just ignore, this is Detour Gold Project, something completely different up north. Very active area. We've got the second largest land package. Once again, great grassroots exploration project, but we can kind of skip through the questions.
Super. David, thank you very much. And please, let's go back to the full screen. Yeah, great. Fantastic. Super. Yeah, first of all, questions from Peter M or Peter J?
Yeah, so David, I mean, the second slide showed sort of, and as we've discussed in the past, you have kind of got a better idea of the structure, and I'm not a geologist, so I'm talking out of turn a little bit, but you've got a better idea of where to look and the different structures in place. I'm just trying, it's kind of the problem all exploration plays have is you have a huge land package, you've delineated some good ounces, but the question is, how do you figure out how to create enough value versus the greenfield sort of exploration versus proving up kind of what you have and making sure that you do it fast enough, yet that in a way that's proper.
So yeah, this is and once again, I kind of, when we look at the North American model for doing things, and it sometimes drives people crazy. We want to find every ounce before we start looking at how to mine those ounces. And I think given the kind of the current climate we're in, given with gold price, precious metal prices, it really, you need to take these projects forward into looking at what they look like as a development type of project. So people can wrap their heads around how is this thing going to make money. So, you always battle between these two sides, which is, hey, just create ounces. This project is great because I think we can keep doing that. We can keep, producing ounces. But, I think we're now, into two streams. One is exploration. We're open in all directions. We're still adding ounces with every drill hole. But we're also, we're drilling probably 80 to 100,000 meters this year. A lot of that is going to go to infill. It's going to go to upgrading the current resources and really starting to tie those together into more of an economic model. So I would say, at this point, we're probably 50-50 in terms of straight exploration growth and, looking at tightening up ounces and then putting some economics on those ounces.
Mm-hmm. Peter J., you have a question?
No, I was going to ask much the same thing. And just in terms of PEA, are you at the cutoff line yet? Or do you just keep drilling? You're obviously finding a lot more ounces. So it's exciting in that area.
Exactly. And so, for our project that we've got, 3.4 million ounces, as I said, probably at that critical mass that we can start looking at the economics of what a development project. So this year we've been working on a lot of non-scope specific development, let's say the building blocks to a PEA. And I would say on our next resource estimate, that will form the basis of an economic study on the project. I think overall, we will continue to grow the ounces, but at some point, I think it's important to show people what this project is going to look like, and I think this is the opportunity to do it. As we kind of approach that 4 million ounce mark.
I have also a question, because you are doing, or you are in the completion of 90,000 meters of drilling. You have a heavy workload here, and I have from your presentation $33 million cash in the bank. So how long will that 33 million last? Can you achieve, let's say, the next major milestones with that?
Okay, so one of the other great things about Val-d'Or, it's a very well-established mining camp with a lot of infrastructure. Right now, our drilling costs are, around $90 Canadian a meter. So, when we're looking at this project, we will probably this year spend about 14 million in exploration, probably about 8 to 9 million on drilling. So we'll end the year with about 20 million in cash for future work on 2021.
Okay, so that looks like a healthy treasury.
Exactly, yeah, and it's Val-d'Or allows kind of very cheap exploration. So we add these ounces at very cheap costs.
Fantastic. I see that management directors have 6%, which is quite healthy, and you have a lot of top institutions as shareholders. So what is institutions? What are the largest shareholders holding here?
So I guess our largest shareholder is Newmont, and so as a strategic, and then Merk is a large shareholder. We've got Van Eck. Interestingly enough, Quebec projects. So we have a number of Quebec institutional funds, the CAS, FTQ, and so very strong hands with the Quebec institutions. Libra out of the US. A good retail holding, I would say 40 to 50% of the shareholding is retail.
And how much has Newmont?
About 13%, just under.
So does that mean that, let's say, they want to have the foot in the door when you keep on going and being really successful, maybe to, let's say, co-develop a future mine with you, or even grab you?
Yeah. Newmont, I don't know. I don't see them building a Val-d'Or operation, but they're, they're so far been good, good shareholders. So, but yeah, I guess that's it depends on how big we can get.
Okay, super. What is, let's say, the major plan or the major target for next year is probably your new resource estimate, right?
Yeah. So I think, so this year's big drilling program, as I said, upgrading ounces, adding new ounces, and then use that resource estimate from this year's drilling as the base for a PEA for, let's say, first half of 2021.
Fantastic, great. So let me see, what is that here? Okay, here's Fernando also saying, the logic to add discovered ounces means a candidate for takeover?
But, yeah, I mean, as Cal said, there's never a for sale sign on these things, but yeah, we're surrounded by underfed mills. So Val-d'Or is an interesting case where we've got at Nico Eagles Goldex, we've got Eldorado, we've got Westdome coming online, and all the mills are underfed, so they need feed. So having 3.5 million ounces in kind of earshot of a bunch of mills is a nice added bonus for this for Val-d'Or.
Fantastic. So from my side, all questions are done. Peter, do you have any more questions?
Well, I'm good. Thank you for all those presentations. It was very interesting.
Okay, super.
Yes, very good.
Yeah, also from my side, thank you very much to all our presenters here, also to Peter Grosskopf and Sprott as a sponsor here, and Peter Maletis. And yeah, because on behalf of Andrew Thake, who has to get organized the next seating already here, I want to say thank you very much to everybody. Great companies. I think this is really high quality, what we have seen today here. Those are companies which are worth to be invested and which are worth to really be researched and followed and probably to be put into your portfolio. That makes really sense. And we have discussed it already 20 minutes before we started. We are all bullish on gold. We all see a much higher gold price, also silver price. And we are really positive on that because this world is moving on with lots of spending, with a lot of debt, and the natural insurance is precious metals. That is for sure. But I think it's always good to have a natural insurance plus a beautiful insurance with making some cream onto the pie, and those are mining companies, because this is the leverage we have, right? So thank you very much to everybody. Thank you very much to the audience. That was really big fun with you guys, and thanks for really interacting and sending us a lot of questions. The next show is here. The next 5 at 5 show is on opportunities in non-precious mining companies and will take place on the 2nd September at 2 o'clock British Standard Time, London time meaning. All right, so to everybody, thanks, bye-bye,